All right, guys, welcome back to the channel. And if you're new here, thanks for stopping by. Hit the subscribe button now as each of the day's analysis builds upon the previous day. Last, we talked about the Friday dump on Saturday, beautiful live stream. The market has recovered since then. However, it's looking a little shaky at this point. So let's look at the short term and the longer term. Now, if we miss out on these particular days, especially as we lead into the most bullish time of the year, seasonally speaking, you can miss out on the vast majority of the profits. That's not just my opinion. We're just going to look at the data and the facts today from the charts throughout the stock markets, crypto, Bitcoin, and the real estate cycle. It might ruffle a little bit of the Trump feathers as well. So stick with me, hit the like button. You know where you are. You're on your home of macro cycle analysis with me, Jason Pizzino, trading for over the last 14 years and investing for the last 18. Let's kick it off with looking at the traditional markets and reviewing some of the data over the last few days. This one comes to us from a friend of the channel, Seth Golden, looking at US net over underweight versus MSCI, etc. Okay, the point of why I'm looking at all this stuff is to have a look at what the markets will potentially might do over the coming months leading into the end of the year. Now, if I'm starting to see more signs of further upside, reasons why there could be further upside, looking at the data, statistics, and of course the charts, of course, I'm going to feel, but I'm also going to set my positions so that it meets that criteria. I think there's going to be upside, therefore I'm going to keep my positions or add to them based on other signals. That's why I look at all the markets. It's not just based on Bitcoin alone. So this particular chart is looking at the over underweight, right? The red line is 2020, the pink line is 2016, blue line is the current year. Now, what he says here is the chase is likely on after the election as most fund managers are underweight and will need to play catch up in Q4. If this is true, based on where their positioning is right now, then you could potentially see pretty significant moves. We're not talking day to day here. People often think that you say bullish one day and it goes down the next. Who's playing for 24 hours? We're playing for months upon months because that's where the big gains are made. The S&P 500 alone's done over 20% this year. Bitcoin, obviously, even more than that. So who's playing for the day-to-day? We're playing for the longer term here, and the signals are still swinging in favor of the upside for the longer term. And in this case, it could be quite significant. They're looking at Q4, Seth's looking at Q4 here, and other data shows the next 3 months, so November, December, and January, could be pretty good. Now, we know seasonally speaking, there are some times around February, March where we do see a drop off or a bit of a correction, but providing it's a higher low, now we're looking longer term, then things are still rosy. So if these guys, US equity positioning is near record low, slightly turning up, heading into the election, if they are actually this far underweight compared to where they were, might have to play a pretty significant catch-up game. Now, this particular one is looking at median monthly flow into equity mutual funds and ETFs as a percentage of total assets under management since 1996, so just short of 30 years. November is one of the highest months, January being a big one, and April as well. So we're looking at the next 3 months, November, December, January. Things are looking pretty good. Mutual fund 2 weeks away from hitting a major buy button. Maybe they are. Best period of second half annual period for mutual funds following flows begins November, generally accelerating after the election. All right, so that's on top of the last piece. Next, we have a look at the S&P and what happens, I guess seasonally speaking, look at each of these years. The last time S&P 500 achieved an all-time high in the month of October during an election year was 1980. So that's going back 44 years. When you know it, during monthly OP/EX week, it peaked and found a pullback from there and into the election. So there is the line. That's basically mid-October when Seth posted this. Now we are 28th. Yep, that's today. And you can see the pullback into the end of November, bit of a rise here around that sort of 31st of October, 1st of November, slight pullback, and then basically pushes higher again, another pullback, and then we keep going. These, of course, higher lows. It's yet to be seen how significant that pullback could be. If you are basing your results on it must be a very significant pullback, Maybe it is, but I wouldn't be playing ball like that considering how strong the market has been this year. We're looking at the S&P 500. In the face of all of the bad news, in the face of all of the wall of worry, recession talks, any of the economic data that comes out around jobs, around CPI, PPI, whatever it is, the market has been going up. You can't deny that. The trend is up. The trend is up. So in the face of any of these events, yen carry trade, Middle East conflicts, like we just saw recently as well, it keeps going up. It keeps going up until it doesn't. I hear that argument very often, right? And it's true. It keeps going up until it doesn't. But do you really want to be on the side of the fear porn bears who are hoping for a great collapse? And they have been hoping for that since 2008, which really, in the scheme of things, I don't really hate to say it, but it really wasn't that bad because it was about a year and a half of down. A year and a half, considering how big the event was made out to be. And then the market kept going up and up and up and up and up and up. And the majority of people missed out. They missed out again, missed out again. And that's why we keep getting into these even more volatile swings on the way up. Bigger moves to the upside and even more volatile swings. So that's a look at the seasonal timing here, especially if October makes a new all-time high, which it has done. So again, just more and more points as to why, at least in my opinion, we don't have too much to worry about when it comes to BTC, even if we see some short-term downside, which I'll get to in a moment. The best day of the year is October 28th. That's today. And for Ryan here, it's his birthday. But basically, this is just basically data stripped from the markets going back 1950 to 2023, just looking at every single day of the year. 0.51. Could it be again? Could it be the best day of the year? Only just getting in front of the 26th of December, which doesn't trade in Australia, but the US, they like to trade on Boxing Day. Anyway, there's some of the best days there. And also November has the third best day on the 24th. So you got 3 of the best days of the year coming up today and over the next 2 months. Keep that in mind as you lead into some of these pretty decent months ahead. Next is 6-week win streak tend to happen in bull markets. So you see these win streaks on the S&P 500 in bull markets. We're basically trying to figure out, is this the end or is this the middle, beginning, middle, end, right? And according to the stats here, these signals come up in bull markets. 12-month return after this signal comes up, 6-week win streak for the S&P 500. You get an 86% result. So you're going to see higher prices 86% of the time. 86 years out of 100. If you see 6 straight weeks on the S&P 500, you're going to see higher prices again 12 months later with an average of 12.6% return. The numbers are just getting crazy with higher and higher prices. And I understand. How can it keep going? How can it keep going on? The main thing that I've talked about for years on the channel. Thank you guys who have been here since 22. Thank you guys who have been here since 2020. You guys know that when markets break out into new all-time highs or even very significant levels, there is a much higher chance they're going to keep going higher. But what you typically hear is when markets get to previous tops or previous, say, resistance levels, then people expect it to come crashing down. They just look for double tops. They look for fearful stuff over and over again. But just the sheer data says it should go up. I prefer, I love to use the charts. I love to use the Gann swing indicator and the analysis that I've learned over the last decade plus that keeps telling you that cycle is in. The markets are going to keep going up for as long as they need to within the cycle. You know, we talk about the 18-year cycle as well. We're in those final stages, which leads me to believe we're going to see higher prices and even crazier stuff, which I'll get to in just a moment. So yeah, just recapping those numbers, it's higher 19 times, count of 22, so basically down 3 of those years, and the median was 11% up for the S&P 500. So the 6 weeks, just to recap that, 1, 2, 3, 4, 5, 6, you can see they're all green. That's what they're talking about there. We had a pullback in October. It doesn't mean we have to go up next week. It just means that when you see this, 86% of the time, 12 months later, there's 12 months, you're going to see higher prices. All right. I think it's probably this cycle going to hit somewhere, let's say we'll be conservative, mid 6s into the 7s. conservatively speaking. We'll keep following up. That's part of what we do on the channel here. The S&P 500 cycle composite for 2024. So the blue line is the composite, putting together all of these cycles, and the red line is the actual S&P 500. This one's going to be great to come back to as well because we still have a couple of months to go in the year. But the red line, this is your scale on this side. The blue line is on this side, which I don't think you guys can see, but the scale is way lower. The top here for the blue line is 8, whereas for the red line, it's probably 48, okay? So just know that 8 on the red side is back down here. So the blue line might look higher, but that doesn't matter. Trend is more important than level. It's just the trend. Sometimes the trends go out of sync. There's down, and here it was down and then up, right? But the majority of the time, the trends are basically in sync. So the point here is, as the market has now fully priced in a second Trump presidency, maybe it has, maybe it hasn't. I think that might be slight opinion here. I don't know how they've come up with that. The S&P 500 is about to enter the best 3-month period, as I said in the intro, November to January. Okay, so if we're going into that, well, you can see that the majority of the gains, well, a pretty significant part when you consider time. So if that is only sort of the 2 months there, November, December, late October, you see a lot of the gains happening towards the end of the year. Gains throughout the year. A lot of people have missed out on it. I don't know if it's most, but a lot of people have missed out on those because they're waiting for really big events to shake the market up, and it just hasn't. This red line, yen carry trade, April, that was Middle East conflicts. Recently, Middle East conflicts somewhere around here. So on and so forth. Great chart to have a look at because it blends together a lot of these cycles as well. The US dollar, before we get into the 18-year cycle and then Bitcoin, US dollar is up again. I'm watching the volume taper out a little here. You've got the Friday bar trying to push higher again, and then Monday has just opened here in the futures market. It's got some work to do to get above 104.5 and then around 105. Then, if it can do all that and get to these next levels, we're looking at 105.8, 106.4, 107. That is going to be where a very significant test comes in. If the US dollar can get above those levels, it's got more strength to go even higher from here. But we also have an interest rate announcement coming up next week. So plenty going on. This is going to be a very interesting one to watch. Obviously, the US dollar has been going up, but it's still within a very significant trading range that goes all the way back nearly 2 years. So we're looking at 99, 100, all the way up to about 107. The point of this is I think over the second half of the real estate cycle, I would expect to see lower prices on the US dollar just based on the cycle itself. But so far, we've seen a pretty strong move to the upside, which was given to us by the 3-day rule. I talked about it on the channel at the time, not after the time, not after the fact, but at the time when we saw 1, 2, 3 days up, it was saying that we're probably going to see some stronger move to the upside. Okay, so there it is again, the 3-day signal, once again, called a very significant turning point for a market. It works across a lot of markets. We used it on Bitcoin as well. Don't forget that was from the March top. So the 18.6-year cycle, 2 seconds on this, guys. Winner's curse. We're at the top. If you're new here, subscribe. This is all part of the macro outlook for the markets. Here it is. Same deal. We're in this second late stage now. You guys have seen this before. The majority of you have, but I said earlier that it might ruffle a few Trump feathers. Just relax. It's all good. It's just politics. The point of this is if you want to see through the noise and I guess how economies work or how the economic piece works and also real estate, some of this stuff is very good to read. It could annoy you, but that's okay, right? The whole point about this is learning. This is Fred Harrison. He was the one who came up with a lot of this, and obviously property share market economics with Phil and Akil have also worked upon that. Fred looked at this earlier in the 80s and called the peaks for the late 80s, early 90s, and then again in 2007. So he's basically called these 2 peaks using the analysis that he has looked at. So that's why I bring it up here, just in case you're Trump supporters or Kamala supporters, whatever it is, I don't care. The point is we want to understand why these cycles work time and time again, and they'll continue to play out indefinitely until we change something fundamentally in the system. And that is speculating on real estate. If Trump's in, zero chance that things are going to change on that. He makes his money from real estate. We all know that, right? Why would you want to take away the speculation in real estate, which means the majority of people will never be able to afford properties as it currently stands, because we have a rent-seeking environment. Everyone chases the gain on real estate at the end of the day. That's where it goes, okay? So if you want things to change, you want to be able to afford real estate in whatever, decade or 2 decades, or you want things to change for your kids or whatever, we need to change something fundamentally. That's maybe my political opinions, but why not? You're here, we're watching it, we're reading it now. It's interesting to learn about nonetheless. Moving on, Bitcoin and the rest of the markets before people lose their minds. Fear and Greed Index is in greed, right? It's in the 70s. It's been there for several days now, but there's just a couple of slight dropouts here on the 24th of October. Now, I posted this on the weekend. It sort of ruffled again, a couple of feathers. People are expecting big drops. And all I'm saying here is if you're watching other influencers and people calling the market and other people on X or whatever, and they're talking about these one more swoops, this shit happens every single time in the market as it goes up. If you guys remember from this area of 2023, they're all waiting for these one final swoops. Guys, there's going to be another final swoop. You're going to be able to get in and then get to your riches. My view is don't wait. Don't wait for one final swoops. They haven't come throughout this entire period. If you call that a final swoop, great. If you don't and you're expecting swoops down below 50K or 53K, the charts are suggesting that it's very unlikely. Not impossible, but it's just very unlikely. So when I say if you're waiting for these one final swoops because some influencer has talked about a final swoop and then drawn a line on a chart that looks like this, I'm sorry to say that's probably very, very unlikely. I've seen this a fair bit. And then they just say, yep, that's it. We're going down. We're going to take 38K out. We're going to take 49K out. Very significant levels, right? It seems unlikely. And I said that as well in that 2023 time, just because of market structure and patterns alone. You don't get patterns like that then result in the upside. It's very, very unlikely. Over a longer period of time, potentially, if you're looking at years, definitely. Like this one here in 2022, it swooped the lows of $20,000. But it took years. Who's wanting to wait years for that? If this swoops these lows, it could be many years before you see this build back up. So structurally speaking, Bitcoin shouldn't break a lot of these lows set here because you've got the low and a higher low set. And if it breaks those and closes under it, that would suggest that the structure is changing and we're going back into a major bear market. Some people believe that. That's okay, right? But currently standing doesn't seem that way. So with that in mind, the macro outlook for the stock markets, for the real estate cycle, which is the most important thing. If you're not understanding the real estate cycle, then definitely spend some time doing that. We can look at the granular stuff here for BTC. Just looking out, say, the last 30 days. And if you miss these significant moves, then you miss out on the majority of the move. It happens every single time. And so what I've got here is the month of October. So there's the first. We're currently on the 28th, meaning we got about 4 full trading days left until the end of the month. Things can change. Basically, within this month so far, there has been 3 significant moves. You got the 11th, the 14th, and the 18th. You could be a little subjective on here if you like, but essentially it's where the majority of the move has been had over the entire month. So to the point of people waiting on these big swoops that are going to take out significant lows. And to me, the lows work on the swing indicator. If you've got the major swing indicator here, looking at your weekly swing, that is, 3 bottoms come out pretty evidently. 49K, 52K, and about, call it 59K. You might get lucky with this one here. But these two, if they're broken and closes under it, it's not going to be good for the structure, as I've already pointed out. So that brings us back to the shorter term, having a look at these last few days and how this happens time and time again. And you don't want to be part of this statistic because it means you miss out. You miss out on all of those gains and you're sort of holding later and later. Now, you got the 30 days here. 3 of those days made up the majority of this gain here. So far, it's been $10,700 from the low to the top. And 3 of those days did $33, $41, and $1,800. So that you can see it a little clearer. There they are there. There are the days, $3,300, $41, all rounded, of course. And the total being $9,200 for those 3 days when the total move of the month has been 10,700. So 86% of the move, 9,200 over 10,700, happened over just 3 days. So if we look at it in terms of time, we've completed 27 days in the month. 3 of those days within 27 days is about 10%, 8.5%, 9%, call it 10%, right? So 10% of the time the move is happening, and within that 10%, that 90% of the time, not much really happens. It's a bit of a shit show. Then within those 3 days, you're getting about 86% of the move. So it comes down to those sayings that you hear quite often, no matter which industry you're in. It could be 20% of the clients give you 80% of the money. In this case, it's 10% of the time gives you almost 90% of the move. So you could split it up whichever way you want. The 10 and the 90, the 20 and the 80, it still is relevant in the stock markets as well. Stock markets, crypto, Bitcoin, whatever. So the majority of the time, the move is trying to figure out what it wants to do. And for a very short period of time, the move is actually taking place. So if you've got rules in play to get a hold of that, great. Breakouts are pretty good. Like we've covered here before, looking at the breakout of October last year, there's the first day there, October 23rd. And a lot of the move happened in, say, one day here, another day there. And then you could break it down, take one of these days. And that is basically your move from $26.5 up to $38,000. So if you miss out on that, basically you're missing out on the majority of the move. I think I made the point reasonably clear. If I haven't, let me know in the comments section. The idea is that you want to be on board with those trends. So if you're unsure of when to get in, obviously I can suggest things that I use, which is the Gann swing indicator. There's a 7-day free trial for that. Plus it comes with a few educational videos daily so that you can understand how to use that tool. A link to the Gann swing indicator through the indicator suite is in the video description. Plus you can use the Ultimate Trader Accelerator, which is a free trading community that we have created for crypto trading. Now back to the analysis, looking at the total cryptocurrency market cap, this time using the true altcoin market cap. You guys know the deal, excluding Bitcoin, ETH, and stablecoins. This is the TIA crypto total market cap. You can get this for free with the Gann swing indicator that I was talking about earlier. Basically, the update from here is we're still waiting on a breakout of 480 billion. The good news, the lows are getting higher. The bad news, you got to wait. So is that bad news? I'll leave that up to you. In terms of timeframes, still playing out here, the 101 weeks from the low is around early December. So about 5 weeks from this date. I got that time frame from the previous cycle. Unfortunately, there's only one data point to use here, just looking at timeframes. But in terms of cycle analysis, it seems to be playing out relatively well. We've had a few moves up that have broken out of key resistance levels in our current cycle. And a similar thing happened last time where you've got the lows. It was a breakout. We had COVID that took it back down, but then quickly came out of those lows. And you didn't see it retreat back under this level here, around that sort of $40 billion, right? You got the higher low, higher low, higher low, break out of the tops, consolidation, and then the big move up. And I've measured it to this particular bar, which broke out, and you never saw those lower prices again. It tested those next tops on the following week, and again, higher lows continue to form. So you could call it somewhere around week 100 out to around week 108, 107, which then would take us into the end of December, early January. So far things seem to be on track. What would invalidate it, again, would be a breakdown of around that $400 billion level, and then these next lows here at around $360 billion. So day to day, we continue to follow up with this because it could be leading us to those alt seasons. Now, if we do get the breakout, this is the flip side to these things. You get the breakout and everyone gets extremely excited, as they always do. It's the next big thing. Would probably need to see the cooling off effect here on the fear and greed index, right? You start to see this thing blow up into extreme greed. We know from history that extreme greed can last for several months, but within those several months, you can sometimes see a quick drop off here. So there's January 22, big move up. That happened from around November, so around 2 months, quick flush out, and it came back for February. So be aware that if we are trending up, that the volatility does increase, and it's just going to do enough to fool the most amount of people the most amount of time. That's the way the markets work. And like I've said before, the swing indicator I think is a fantastic tool because it'll let you know the trend even if you start to see these big swings against the move to the upside. And of course, that's where I think things are going. ETH, maybe it's not going that way. It is really struggling to get above $2,900. The good news, it's still holding above all of the previous lows. So far, is putting in higher lows. 2,100, 2,150, 2,300, and last week we had around 2,380. So there's still higher lows, slightly higher highs, but still getting crushed down from the 2,900 level. So until that breaks 2,900, you have to expect that this is going to be weaker than the majority of other, say, layer ones, right? Which leads me to Solana. And last week we looked at the breakout, the fourth time breakout, which is a very massive signal to use in your trading. Huge. First, second, third, fourth, almost always. It's not a guarantee, but almost always when you get this fourth time breakout, you see moves to the upside. And that's happened now. You've got that breakout and you could take profits on this on the way up, right? We had the flush out on Friday. I did the live stream here on the channel. If you're not subscribed, probably by this stage, if you're watching this far, you probably are subscribed. And of course you do hit that like button. Let's get that ratio up again. Now, with Solana, that correction here tested those tops. 1, 2, 3. Came back and tested around $160. The last 2 days, however, have been a little bit weaker because, well, it's the weekend. But when you look at this in relation to weekend volume, Saturday and Sunday, it has been pretty good volume. There's Saturday. Actually, last Sunday was very strong volume breaking out of those tops. Take it back the week before. Saturday, Sunday, low volume. Saturday, Sunday, low volume. Saturday, Sunday, low volume. You get the deal, right? The volume is typically lower than the weekday volume. So the fact that we've seen pretty significant volume over the weekend compared to other weekends, that's one thing to weigh up. However, it hasn't been as strong throughout the week, but that's usually typical. So to look out for a break of around 180 from here, going to be more strength to the upside. It's going to basically show that this signal has got even more strength left in it, and which you can take advantage of with the swings. Look at the higher lows forming here. Look at the higher highs forming. Higher highs. You got even more higher highs, higher lows continuing to form all the way out of the 3rd of October. So just continue to ride that trend until the end. Solana looking pretty strong and likely to outperform ETH. We'll take a look at Solana ETH here. It has broken out of the all-time high for ETH versus Solana, or Solana versus ETH, which means Solana is going to outperform ETH just based on this alone. And finally, looking towards ETH BTC, which could potentially signal the end to any of these moves to the downside. And with that consolidation could potentially just mean a little more time here before we start to see further downside. And to really change this thing up, it's got to get back above the previous lows as it has done this entire move. So you can see as the lows form, it breaks down, tests above, and then breaks down again, tests those lows, tests the lows, and breaks down. So if you see ETH break down from all these lows that are at 0.0385, right, then you'd expect further downside leading into around that time frame of December. So let me know if you do get into reading books around the real estate cycle and how we are all rent, you, me, and the rest of us. We're rent to the real estate market no matter what we do. Anyway, that's Bitcoin, stock markets. Hit the like, subscribe, and I'll see you back here at the next video. Until then, take care and peace out.